What's up, ladies and gentlemen? It's your man here, Miles on the Money. In today's video, I'm talking about how I'm building wealth in my 20s, part 2. So in part 1, we just talked about the high yield savings account, eliminating that high monthly expense, car loan, credit card, whatever it is. Hey, we also talked about investing in yourself. Make sure you do that. But we're going to dive straight into it on this video. And also what I'm going to do is show you guys a chart on how your car note is costing you millions of dollars. I'm going to show it again if I didn't already show you guys that. So let's go ahead and get started. Let me start this video off by saying I am not a financial advisor. This is not financial advice. I'm just a guy here on YouTube telling you what I'm doing. So anything I say about a stock is not a suggestion for you to buy, hold, or sell. I need to get that disclaimer out there, good people. So in today's video, guys, we're talking about building wealth. And I'm saying in my 20s, since I'm in my 20s, but this could be any age. Number one, get that brokerage account or retirement account started. Personally, I'm doing both. I have a Roth IRA account that has a lot of tax benefits. So you have to, if you invest that account, you have to make sure you keep the money in there. You can only withdraw your contributions. Let's say you put $5,000 in and you make $10,000 in a few years. You cannot take out that $10,000 and expect to not get taxed. You'll get taxed on that. So know that and be prepared to pay those taxes if you plan on doing that. Or if you plan on doing that, just taking the money out and kind of trading, not really investing, because investing, you hold it, the asset for quite a long time, maybe not even sell. But if you want to sell, then just get a brokerage. I would just do a traditional brokerage account. So that's the main difference there. So what am I actually investing in? Well, what's something good to invest in, especially at a time like now where the stock market is kind of down with this wartime, and just to secure your funds? Well, I would say I would have ETFs. What is ETF? An exchange funds. Basically, a bunch of, I'm not going to grab that. Basically, a bunch of good stocks all together in a basket of stocks. So if you want to invest in Apple, Amazon, Google, you can buy ETF for that. What is ETF I use? Well, I invest on Fidelity with my retirement account. So I invest in FXAIX. That's Fidelity's version of the S&P 500, which tracks the top 500 companies in the United States of America. You can buy stocks or ETFs that are in broader markets individually. I'm sorry, not individually, but internationally. But I'm just investing in the US. I probably will start doing internationally, but right now I'm just doing United States. So I mentioned FXAIX. That's only if you're on Fidelity you can invest in them. Another one you can invest in is VOO. That is a Vanguard ETF that tracks the S&P 500. You can also do VTI, Vanguard Total Stock Market ETF. And my personal favorite, SFY, Sofi's version of actually VUG, basically, which is a growth stock focused on growth. So you could invest in VUG if you want growth, to focus more on growth. It's definitely more aggressive than the FXAIX, which is S&P 500 tracking, and it's more aggressive than VOO and S&P 500. But hey, the growth stocks have the possibility to multiply even more than the other stocks. So that's the pro and con about it. Just like it can multiply up, it can come down quite a bit. So keep that in mind. And SFY, it's a growth stock, and they are averaging, I think, close to 20% gain on your investment for just a year, which is more, that's beating the S&P 500. S&P 500 is about 10%. So that's a great return on your money. Again, guys, this channel here, we're talking about investing in the long term, not trying to make money quick. That if you're into that, this is not the channel for you. We're talking about investing for the long term, not making a quick buck or a quick $100. That's trading or other stuff. You can stop watching these videos now if that's all you're interested in, because I'm not going to teach it here. That's gambling. We're not going to discuss that. So sorry about that, guys. But I hear a little off today, man. But those are the ETFs I would recommend. Personally, that's what I invest in. And actually, if you want individual stock, Hey, go with products you use. I say this all the time in my videos. Apple, iPhone, I use their products. I'm looking at getting an Apple computer. I better make sure I have some Apple stock if I'm doing that. Or if you're a big Nike fan, you better make sure you have that Nike stock. I don't want to see you guys having a bunch of Nike or Jordans in your closet and you have nothing to show for it with the stock. You're just being a consumer at that point, which that's what this country wants you to be. But come on, let's start building some real wealth here. Because if we're just consuming, what are we going to bring for what are we going to have for our future generations? You can't bring those shoes, those nice cars, these phones, these devices with you when you leave. It's just going to be here. And most of it is just going to lose value. So you might as well invest. Invest now and invest young. And if you're older, don't feel bad. It's not too late. The best thing to do is get started. And a lot of people are spreading fear now, saying, oh, the market's red, blah, 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 blah. The funny thing is, guys, a lot of veterans and people have been in this game for a while, way longer than me. I'm new to this. I would still say I'm new, even though I've been in this for a few years. I would still say I'm new. They are, what they say, Birdman?
Oh, that's my thing. That's my thing. I just had a habit of it, like, because they always say if your hand itch, that means you're getting money. So when my hand itch a lot, I just rub them, and it's just my thing. I love it.
Or whatever it is, man. They're happy about it. They're looking forward to making that money, building that wealth. When the stock market is down, best believe big money is loading up on some of these stocks. Now, I'm not saying load the boat. Again, any stock I say is not a suggestion for you to buy, hold, or sell. I suggest you all to do your own research on them. But the industry, in those big corporations, they're making a lot of money when the market is down. You can sell options. We're not going to discuss options. Save that for another video. But when you buy the stocks at a lower price and then they rise up, that's what you want to do. Everybody buys them when they're green. You got to be disciplined and know what's good for you. It's like eating those vegetables. They don't taste too good, but you know it's good for you. It's got that fiber in it. It's got that protein in it. Hey, I don't like the way this tastes, but hey, it's good for me. Part of investing in yourself. So with the stocks, I'm buying on red days, not only green. I try not to buy on green days, but now it looks like, hey, are we in a recession? The market's trending down. These war threats, hey, a lot of fear, uncertainty, and doubt. FUD. Fear, uncertainty, and doubt. That's the time when to buy. Look at the fear and greed index. Is it low? Is it in fear, extreme fear? For me, that's the time to buy. If it's in greed and stuff like that, I think Warren Buffett said, or actually I'll quote Chris Sain, one of these big investors, Chris Sain, buy when others are fearful and sell when others are greedy. So we're like the firemen running into that house of fire. Hey, we're going to buy those stocks at a discounted price. That's all the red really is, guys. Discounted price. You guys want to run out there and buy this new iPhone. As you see, I don't even have the 17. And that's the thing too, not buying, I don't buy the newest iPhone every year. I'm still rocking with my 15, which to me, this is an awesome phone. I had the XR before this one, super old phone. I don't upgrade every year. You know, people who upgrade every year, you're paying $1,000 every year or over time. Maybe if they can't afford the 1,000, you can invest that money in the stock market. There's tons of stuff you can do, guys. I hope this video was educational for you, but those are my top ETFs that I personally have money in and that I invest in. You guys let me know what you're investing in. Leave a comment down below. And if you're new to investing, hey, welcome to the channel. Consider hitting the like and subscribe button. Make sure you hit that bell notification that notifies you about all posts. But hey guys, we're here for the long run. That's what Miles on the Money is for. I mean, you could do this on your own, but we're looking at the investing calculator. Let's say we're 20 years old. You're going to see how time is your best asset. You're going to retire at 67. You want the full benefits. Let's just say that, right? Okay. Do we have any money currently in investments? We're going to say we don't have any, right? Zero. Let's put the zero in. How much can we contribute a month? Let's do $400 a month. Say that's a car note. Yeah, let's do that. How much do you get on your S&P 500 rate? 10% annually, just about. Look at that. $5.1 million you get if you stay consistent. $400 a month just till you're 67. Look at that. Now, let's say I'm 27, and let's see how much I can get with the same thing. Yeah, let's do $400 a month. We want to keep it the same. Same exact contributions, just a different age. Look at that. Instead of 5.1 mil, it's 2.5. So the best thing to start doing is investing now. Now you guys see what I'm saying? Look at that. Beautiful. Now, let's say you start making better money, good money, or you're really tightening up on this, you're budgeting and everything. Let's say we're going to contribute a little bit more. How's 700 sound to you guys? Let's try 700. Same age, instead of 2.1 mil or 2.5, it's 4.4. Let's say we're 20 again. We want to do it 23. We want to do it hard. How much we want to get? $6.6 million. Guys, come on. So that's 5.1 mil from just 400, but we bumped it up $300 more, and it added up to 8.9 mil. Almost $10 million, guys. Look at that. Amazing. You see the difference? That car note is costing you millions.